For Taiwan Future Exchange, we have annual trading volume exceeding 200 million contracts 3 years in a row, and we expect this year to be the fourth year. It is about 1 million contracts traded per day on average. Our core products, TAIFEX futures and options, are among the most liquid equity products in the world. For example, TAIFEX options is ranked number 6 equity options in the world in terms of trading volume. Comparing to last year, the overall trading volume increased by 5% this year, and the open interest increased by 20% this year. In terms of participant structure, we have a majority of participants being retail investors. 50% of our trading volume comes from retail investors, the other 50% from institutional investors. About the recent development, we launched after our trading session, May 15th this year. This extends our trading hours into 19 hours per day. In addition to our domestic equity products, market index products, sector index products, single stock futures, single stock options, equity futures and options. We have been developing 2 new categories of products. The category of currencies, such as RMB futures and options, and the category of foreign index futures. We have futures on Japan's topics, India's Nifty 50, US Dow Jones and S&P 500, all denominated in local Taiwanese dollar.
You recently launched a Dow Jones futures contract, an S&P 500 futures contract, as well as a Nifty contract. Any particular reason for why and what that's focused on? I know you had you worked with the CME on some of that as well.
Actually, whenever we launch or develop new products, we do carefully on market consultation. We see market demand for all those products. For example, India is a fast growing economy, and our investors are pretty interested in the market. And the other example is CME's Dow Jones and S&P 500. These two products are among the top 5 products that our local investors place orders directly to CME. But the reason we launched those products is not actually to get the investors to trade just locally, who originally trade through CME. The purpose is that there are actually more investors who are interested to find a channel to trade directly in those foreign markets, but they do not want to bear currency risk. And when we denominate those futures in our local currency, there are more participants who are willing to trade those markets.